All right, guys, welcome back for another video. In today's video, I want to talk about the Bitcoin macro chart and tie it into market psychology. I've marked off the two recent halvings in Bitcoin. I don't want to go too much into the supply side of Bitcoin. That's kind of a whole video in itself. But I marked it off just to kind of frame the idea of the macro in the term of 4-year cycles. That time frame is pretty important, and we'll touch on that later. But right now, I want to look at current price action, identify kind of where we are in the market, and objectively, Bitcoin has sold off 63% from the highs. And if you go to the Bitcoin Fear and Greed Index, this is the most recent print, you see an extreme fear read. And Bitcoin has been in an extreme fear read for a long time. So you to gauge a capitulation, you want to see that extreme fear, and you want to see it being at that level for a decent period of time. And that sort of lines up with some of the capitulation events we saw here, also here as well. Of course, you have two different types of recoveries, right? You see a V-shaped recovery here and a more drawn out area here. These are definitely more painful for holders, but the capitulation event is similar. So I want to draw your attention to this chart here. This is a graph of somebody graphed the amount of news articles mentioning the word bear market, and you can see here where these things peak. Right, bear market. The media doesn't produce articles predicting bear markets in a way that is predictive of crashes. What it's doing is tapping into the fear that results from a crash. Right, so you see these bear market articles peak here, right after this not really a bear market, but a little bit of a crash, or at least a crash relevant at that time, of course 2020. And now you see that kind of peaking up, hitting extremes, not quite at 2020, but relative to that. And you can see that as these contractions happen, they tend to get more volatile, right? So as credit expands and credit contracts, you get more volatility within the market. So let's go to this graph as well. This is pretty interesting. So this is the graph of retail equity purchases. So you can see that retail equity purchases kind of peaked just before the COVID pandemic, and then immediately after, peaking up in early last year, around December 10th, and now it's retail purchases has retraced, to that pre-pandemic level essentially, and so it just gives you an idea of where the retail sentiment is at. That retail is not heavily invested in the market, at least the equities market, and again, it's no guarantee of anything, but it is a very decent indication of sentiment in the market. And then another topic I want to talk about is the wall of worry. We'll have to go back to the price action to talk about that. But if we go back to the price chart, the wall of worry is a concept that anybody who's been caught up in a capitulation event can imagine. It peaks after periods of extreme fear. So you have this capitulation event here. Let's see, from top to bottom, this is a 52% correction after a pretty already significant correction as well. So that's brutal right there. But what the wall of worry is essentially, right, you have this, after capitulation environment, you have a peak of fear, and then people will naturally identify so the perspective is after the capitulation, they'll be down here, and fear has peaked, and they're looking at all the resistance above here, and they just, it's the wall of worry, and price climbs from that bottom, and it does so aggressively as traders are reluctant or hesitant to trade in line with what's currently happening, right? Because they're focusing on the historical price action, and they're looking at this wall of worry. I remember trading Bitcoin back here in 2018 in the off the bottoms right here, and I remember how the sentiment in the market, or the narrative in the market, was that this was just the big bad resistance, right? A lot of people down here, maybe they weren't long, but they had, or maybe they were long, but a lot of people were planning to sell this area here when it retests. Of course, price just sort of rips through that area. And yeah, so this is, a disbelief rally. People, after capitulation, they just, they're in disbelief. There's just too much resistance above here. And ultimately, after an impulsive move, then up here, they'll be drawn into the market. The disbelief will be shattered, and then people start thinking, well, maybe this is a real rally. And then, of course, that's when price breaks down from there, and you have this real type of choppy market here. You can see, whether you're looking at, so you get, price extension fill, low, and then you get lower lows, higher highs, lower lows. So all the people who, entered here after not trading the up move, they essentially got, whipped around a little bit before the market ultimately moved up. And you can see, this is also a major capitulation event. If you haven't been caught up in a capitulation event, then you really don't know what it's like until you've been in it. So it's almost one of those things where, it's very difficult to identify it until you've already been through it, right? There's really no substitute for experience. You almost have to go through it once, capitulate, and then the next time a similar market environment is playing out, then you can identify that type of situation and take the necessary steps to avoid it. So here, there in this capitulation here, there were very significant price distinctions, right? Um, price came down, filled the price extension, but and that was a tradable move. I mean, if you went down to a daily chart, that was a very quick move, and for it's only $1,000, but at this price in Bitcoin, that was like 20%. So, and that's very tradable. But what you see is, you have just a clear capitulation event, sets in a low, and then price drifts upward. And this really is the wall of worry, right? There, I mean, there's so much resistance here, resistance up here. People are not longing it until they get confirmation, and then you're left in a situation here with, even at the ideal area to open a long position, like right here, people generally associate this moment with some previous moment where they thought it was a good time to long, but maybe it didn't work out. It's just the psychology of the market. It's constantly playing out. It's really the same thing that plays out over and over and over again. Now, it's hard to identify where you are in the great scheme of the market, but I want to draw your attention to this chart right here and kind of illustrate why this phase in the market might be a bear trap, and why we haven't seen the real parabola in Bitcoin. And in Bitcoin's parabolic nature is due to the supply constraint and the fact that if massive money managers wanted to get significantly involved in the space, there's just not enough supply for them to all do that. And if they did it in a real way, right, price would go parabolic. And one of the reasons, actually, why I'm not, phenomenally bearish on price is because essentially, I was pretty bearish here, actually. So I want to make a key distinction here, is that I was very bearish on price action right here, actually. I actually took a short on here. And the rationale for that is that, let's go back to this historic price action. The rationale is that, Bitcoin did go parabolic, at least, maybe not to the same scale as some of the previous cycles, but this is a very clear parabolic rally. And then you see when it tops out, that's when you want to get your bearishness peaked. So I was very bearish here, um, and rightly so. But I wasn't necessarily as bearish here as I could have been, just because in the grand scheme of things, this was more of a range bound market rather than your parabolic move up. And that's one of the reasons why I'm not as bearish on this current price action right here, just because we don't have a blow off parabolic, which is typically what I would, the time in the market where you want to get the most bearish. What we have is a ranging market, and I can put it in perspective by going to the RSI right here. So to put this in perspective, the RSI peaked in the critical zone. Let's see. Back in January 2021. So we are, a year and a half from the peak of the RSI, whether you want to use the RSI or the actual price parabolic peak, which was a couple months later. It's still over a year from that peak, the parabolic peak. And to put that in perspective for the previous cycle, you had your parabolic peak here, and it was about from December 2017. It was about a year until the capitulation. And ultimately, not again, the bull market didn't immediately start there, but it was a very significant low that never got violated. So this adds the component of time to the analysis. So that is a very significant component, right? A lot of people can, especially holders, right, who non-leveraged players, they can withstand significant volatility, especially if they're younger, or maybe they're just used to crypto. They can withstand significant volatility, but generally what the market can't withstand is drawn out downside, right? So the element of time is very, very significant, right? This capitulation here in V-shaped recovery is much less painful than this type of capitulation with, drawn out price behavior. So it's just an element, to add to your thinking when you're thinking about the macro. It's one of the reasons why, I'm not as necessarily bearish as maybe some other people. And again, with some of the retail sentiment indicators that we've seen, it's hard. I don't want to be swept up in that narrative, right? I could post bearish videos to appeal to people's fear and people's incentive. There's a natural incentive there, but I think that would be you know kind of a violation of the trust in any of my viewers, and also just not really how I want to align myself. Again, I should temper that notion with the idea that price could certainly go lower. Again, there's no guarantee that it won't, but essentially one of the key distinctions from my trading methodology as far as my spot accumulation is that if price retraces 50%, at least me personally, I start getting pretty aggressive in my accumulation strategy. It, uh, there's everyone has a different number. You may be expecting different volatility and have a different number. Mine is personally 50%. And I think it's important to build out that strategy for yourself. Create a strategy for spot accumulation, and play it out over a long period of time. So for me, I have it written down that, and I won't go into the details of the accumulation, but essentially I get much more aggressive in my purchases of spot Bitcoin after a 50% correction. And one of the reasons why it's important to write it down is because when after any 50% correction, right, you're left with the fear that price could go lower, essentially. But if you have it written down, then you can act on that plan without, you may still feel the fear of further correction, but you have the plan written down and you act on it. So you are feeling the emotion, but it doesn't affect you negatively. And again, price in this case, price did go lower. I mean, it did bounce at the 50% level, but you could have took it, secured equity, but ultimately it did go lower. And then you're left with the same problem here. Whereas this is even a more attractive opportunity than it was at 50%. But the psychology is kind of inverse to that, right? The psychology is that, it could go even lower. So it's important to have a plan for that. Personally, so let's revisit this 4-year supply chart right here. And I want to tie back into a very important thing to mention. And this is very critical. If you get one thing, if you're new to the market, the Bitcoin market, and you get one thing out of this video, I hope it would be this. If you're starting, try, maybe actively trading. If you are actively trading, you're going to lose money. And I think the best thing you can do is to create a fixed purchase amount of Bitcoin and stick to that purchase amount every 4 years as to build a spot position. Of course, you can have a trading account alongside it, but I think it should be large. Your spot position should be larger than your trading account. And essentially what you want to do is you want to buy a fixed percentage of Bitcoin every few weeks. Maybe, and then that's different for everybody. I think it should be representative of your conviction and how bullish you are on the asset. And, if you believe in the fundamental thesis of Bitcoin, which is that it will continue to appreciate and be global money in, maybe a few years to a decade or even more than a decade, regardless, it doesn't really matter the time horizon on that. It just matters, what is your conviction in the belief that Bitcoin will ultimately be the money that you use, later in life? Well, whatever the conviction is, or whatever percentage you believe that to be, it should be reflected in your allocation. It probably should be, a small percentage, but say, I just throw a number out there for ease of rounding and simplicity, is say you just invest 10% of your paycheck into Bitcoin every 4 years, or excuse me, every couple weeks, well, every 2 weeks for 4 years. You will experience the volatility in a way that's mitigated, right? As opposed to when people enter the market, they try to enter the market with a mindset of picking tops and bottoms. And of course, that never works because, well, first of all, they're inexperienced. And even if you are experienced, it's difficult to impossible to actually do that effectively. And one of the best things you can do is, just build that spot position for your first 4-year cycle. And then just the skin in the game of having that allocation and riding the huge volatility that will occur during that 4-year period, that will teach you a significant amount and protect you from getting blown out on your trading account. And, there's one thing that I noticed among a lot of successful crypto traders is that a lot of them, maybe they break even in their first cycle, the first couple of years. And it's generally not until the second cycle, right, that they've been through that 4-year cycle, that they really turn the corner and start, making huge profits. And, the type of profits where you send in your resignation letter and start, helping your family out, your friends and family, and start really, building that life you want to build for yourself. Anyway, I hope you guys like this video. Please make sure to subscribe to the channel. Helps us out a lot. And I'll catch you guys in the next video.